Here are today's top 6 crypto stories. Bitcoin just had its best week in 3 years, and for once the buying shows up in a table, not a tweet. $1.6 billion in 4 days. Here is who bought. On Thursday, U.S. spot Bitcoin ETFs took in $606 million, the biggest single day since the 1st of May. BlackRock's fund took $503 million of it, 83%. Fourth straight day of inflows, each bigger than the last. $1.61 billion in 4 sessions. Bitcoin went from under $64,000 Wednesday to a Friday high near $79,500 and sits around $77,000 this weekend, up about 22% on the week. The biggest weekly gain since March of 2023 and the highest price since May. Part of that was force. More than $4 billion of shorts were liquidated in 2 days, but forced buyers do not show up 4 days in a row with a bigger check each time. Allocators do. Bitcoin peaked above 126,000 last October and bottomed near 58,000 in June. The turn came from outside crypto. Wednesday, the Treasury doubled its long bond buybacks and the dollar fell to its lowest since May. Same day, the president met crypto executives and backed the Clarity Act. Thursday, the inflow. Friday, the high. The Fear and Greed Index was 29 a week ago. Fear. Saturday, it reads 72. Greed. Who is buying decides what this is. The shorts bought the first leg because they had to. The ETF buyers bought the next because they chose to. The risk is the engine. A rally that starts with the Treasury buying its own bonds is a liquidity story, and CoinShares says 80,000 needs a clearer signal from the Fed. That signal, or its absence, comes at Jackson Hole on Thursday. The shorts paid for the first 10%. A brokerage account paid for the next. Whether it keeps showing up after Jackson Hole is the only question that matters. 2. Strategy holds 840,000 Bitcoin at an average cost of $75,385. In July, at 58,000, that stack was $13 billion underwater. At Friday's price, it is a $1.4 billion unrealized gain. 1 week erased a $13 billion hole, and the stock rallied 27%. Notice what management did near the lows. Sold about 6,900 coins and bought back $347 million of its own preferred stock. That is the leverage every Bitcoin treasury company carries in both directions. And it was defending the preferred, not adding coins. 3. The SEC's proposed crypto rulebook, Regulation Crypto Assets, hit the Federal Register Friday. 146 pages. And a 60-day comment clock that runs out October 20th. Inside, token offerings up to $5 million with simple disclosures, up to $75 million a year in 2 tiers, a safe harbor that takes a token outside securities law once conditions are met, preemption of state registration for qualified purchasers. The document says the existing rules are, quote, not fully fit for purpose. Last week, this was a press release. Friday, it became a legal clock, and that clock outruns Congress. 4. Ethena, issuer of the synthetic dollar USDE, is putting part of its backing into a $1 billion lending facility with FalconX, over-collateralized loans to institutions through a special purpose vehicle, collateral at qualified custodians. The token, ENA, jumped 48% Friday. A stablecoin's reserves are moving from funding rate arbitrage into a loan book. That is a yield story and a risk story in one sentence. The collateral is over-collateralized. It is also a counterparty. 5. At 11:13 UTC Thursday night, Mantra Chain stopped producing blocks, an exploit in an upstream dependency, third-party software. Transactions, deposits, withdrawals, all frozen. The team cannot yet confirm the full scope. The token fell 18.5% to a record low. This is the chain whose old token lost 90%, about $5 billion in April of last year. In a rally week, a full halt is the reminder. The token you hold is only as liquid as the last block. 6. Nomura's Laser Digital is registered as a crypto exchange service provider in Japan. the first new entrant in 4 years. Liquidity for domestic platforms first, then institutional trading. 1 day earlier, Korea licensed a foreign custodian for the first time. 2 of Asia's most closed markets opened to institutional desks in 2 days, and a survey the company cites says 79% of Japanese institutions plan crypto exposure within 3 years. The next bid in Asia is not a retail app, it is a bank's trading desk. Best week in 3 years, $1.6 billion through the ETFs, greed at 72, and the SEC's rulebook on a 60-day clock. That is crypto today. Here's today's question for you. The biggest crypto week since 2023 was triggered by the United States Treasury buying its own bonds. If Bitcoin's best week is a liquidity story and not a crypto story, what exactly are you holding when the liquidity turns? Your honest read in the comments. The blue pill says the flows are the signal. 4 days of rising inflows, whales accumulating, and a regulator writing rules instead of lawsuits. The bottom was June. The rest is noise. The red pill says fear to greed in 7 days is a crowd, not a regime. The engine was forced short covering and a treasury signal the bond market already rejected. Leverage built this week's candle, and leverage does not care which way it takes the next one. 1.6 billion came in. Watch whether it stays. The timeline keeps moving. We will see you in the next one.